Okay, do it. You're on.
Cool. Just gonna go ahead and share my screen. All right. Can you see it?
Yes, we can
Yes.
see it.
Great. All right. Well, thanks everyone. Welcome to our demo. We are Team Gravity. We're calling from Nairobi. In Sub-Saharan Africa, we look at a massive unmet demand for credit by small businesses, several $100 billion. And two big factors are that, lenders don't have enough credit relevant information about a merchant, in particular, purchase history with their suppliers, at which frequency they buy, etc., which value chain they're embedded in. And also there's a risk of fund diversion. So it's difficult for a lender to make sure that the funds are really used to pay the supplier. And what we do at Gravity, we address it into this in two different ways. We're a decentralized identity company, so we enable merchants to create private and portable identities where they can gather all this data that is relevant, and they can then share this with a lender, and the lender can provision through an API that we provide earmarked credit. That means it can only be used to pay supplies. And then what the lender sees here, you see, this is the merchant sees here, you can see that on the right. When they have a credit limit that they got approved, they can choose to buy goods with a loan, at which point the credit is activated. As a company, over the past 2 years, we made around $250,000 in revenue, mostly with decentralized identity projects. And the supply chain finance solution, we're currently deploying it with one supplier that serves over 20,000 merchants in Nairobi, a lender on a couple of hundred merchants. Yeah. And despite all this, what I mentioned, the interest rates that we get from lenders are still quite high, sometimes more than 0.5% of interest per day. So our idea for this bootcamp was, okay, can we create pools where anyone around the world, institutions or organizations or individuals, can contribute liquidity in exchange for an interest for certain, and lock that in for a certain amount of time, and we can then directly link up this merchant with that liquidity. So then when they choose buy goods with loan, payouts are made directly from this liquidity pool to a supplier. And we've worked on a prototype, especially an interface for the individual lenders, or the people that would be willing to contribute money. And Joanna, sitting next to me, is going to walk us through that.
Yep, exactly. So as Johannes mentioned, this is the app that individuals, organizations, or other institutions who wish to chip into the liquidity pool would use. And yeah, you basically sign up, and we explain how it works so that you can earn interest at very low risk, and also help improve access to finance around the world at the same time. On top of that, you can also verify who benefits from the funds you put in the liquidity pools. So basically, once you've topped up your account, you can choose where you're going to deposit funds to. We have different pools with different maturity dates and return. So once, in the detailed view, you can get more information on what kind of businesses are benefiting from or are able to access finance then through this pool. Here's just a summary. Once you've chipped in, for example, someone deposited 80K into the small retail business pool. And yeah, here's our landing page. So it's just a summary of how much you've contributed in the last, or since you've signed up. And also quite interesting, you can follow up on how many borrowers have received access to affordable loans through your contributions, and see who. And yeah, just a general overview as well.
Cool. Thanks. So of course there are things happening in the background once someone contributes to a pool, and we've also built a little prototype in the Stellar testnet on this, which my colleague Julien did, was also on the call. Basically what we did to have a prototype, we created 4 different wallets. So one for the lenders, the individual lenders who contribute money into a liquidity pool, which you see here, and one for merchants, and then suppliers, which are paid directly from the liquidity pool. You can see that here when the merchant clicks on buy goods with loan. And we created 3 different assets. One USD asset that is paid into the liquidity pool, and that is also paid to the suppliers. Of course, it would be through payment bridges. A USD loan asset, which is kind of like the token that merchants can redeem. So if we assign them a credit limit of 10,000, they can redeem part of it back to the liquidity pool, and this is the USD loan. And then there's also USD interest or USD debt asset that represents in the merchant wallet how much they need to pay back. So I'll show you what Julien has made. He recorded a video. So here we see on the left the different wallets. We see here the liquidity pool. So we already have 900 in the liquidity pool. Yeah, this is the liquidity pool wallet. We have a merchant wallet here, and we have a supplier wallet. Both are empty so far. And now we have made a credit decision. This is Gravity, for example, who made that, and we assign $100 credit limit to the merchant. What you will see here on the left now, we're still looking at the merchant wallet, is that the the USD loan asset has arrived in their wallet, which means now they have, they can at any time spend less or $100 to pay. So this is what we're doing now. So pay goods with loan is the API call that we're executing now. The supplier comes and he decides to pay, $40 of his purchases with using this loan. So now what three things will happen. So first, 40 of this USD loan assets will go back to the liquidity pool, and then 40 USD will be paid to the supplier. And the last thing is that an interest, or what we now a USD debt asset, will be sent back to the merchant, and this represents what they need to repay. So this takes some time to execute because we need to execute all these different transactions, but should be done any second. So we're still looking at the merchant's wallet, and now 40 USD loan left the merchant's wallet, and instead we have 42, which is what we have to repay, a principal plus interest. And in the liquidity pool, we see that we got 40 redeemed USD loan, and we actually should see that 40 were sent also to the supplier, and the supplier wallet now has 40 USD. Of course, we would need to pay the supplier directly to till number through a bridge, for example, something like provided by ClickPesa or something, which is, by the way, how this works at the moment. The lender is pinged when the merchant clicks on buy goods with loan, and then the lender settles the payment with M-Pesa. And this idea here is, okay, we directly link that up. We basically cut out the lender in a little bit and directly link it up with these pools. The opportunity that we see, for something like this, building it into a solution that we already deploying in the supply chain finance is, okay, if this really brings, the cost of finance down, it's really an amazing impact. Every 0.1% counts. We can bring this verifiability thanks to using, decentralized identity, which all of this is built on. So, without disclosing individual identities, we can prove in which region Nairobi, which genders, which type of shops, etc., for which kind of products were supported, which I think is interesting for people that want to deploy funds. And of course, there's a massive market. And on the risk side, I mean, there's definitely regulatory things to look into. There definitely needs to be an entity, that has the loan contract with the merchant, and maybe also other things. There's an exchange rate issue that we didn't get into. So, what if someone, of course, people contribute maybe USDC, like USD, and then, we pay out Kenyan shilling on the other side. And then also these assets need to be converted. So things that we've put a little bit on the side, but so that is the prototype. Thanks for listening, and happy to take your questions. And also Julien is our engineer, is on the call, so he can answer technical questions as well. Hello.
Sorry, I was muted. Thank you guys very much. Very kind of sophisticated, complex transaction flow you guys were able to implement in a relatively short time. So impressive. And, clearly supplier credit in Africa is, well, pretty much everywhere, is a pretty huge, important problem to solve. So thank you guys for sharing that. We don't have a ton of time for questions because we went a little bit over, but I guess if anyone has a quick one that they want to throw in, please raise your hand or chat, put it in the chat or what have you. Maybe just quickly from me, I'm curious why you guys have settled on this notion of sort of dedicated payments or payments to a specific merchant for a specific thing versus just giving the person or the borrower the money directly?
You mean paying the supplier directly instead of giving it to the borrower?
Yeah, that's right.
Yeah, I mean, this is the earmark credit thing. This is basically a way to bring the cost of risk down because, you know, the merchant, they don't never have the money, like they can only, the money can only be spent on supplies from the specific suppliers. So we have no fund diversion risk, let's say.
I suppose it probably creates a natural distribution channel through those suppliers as well, right? I mean,
Sorry.
for larger suppliers who sell a lot of goods, they're going to want to bring you their customers so that you can finance their purchases from them, right? So it should,
right. Yeah, I think so. The main onboarding channel is like partnerships with the suppliers that basically then onboard, you know, also send the onboarding assets to their merchants and also then provide, you know, like data send data to the identity wallets that they can then share to get a credit limit.
Yeah, cool. All right, thank you guys very much. Really appreciate it. Thanks for being here this week and sharing that demo. And